All right. Good afternoon or good morning to our guests in Brazil. I'd like to welcome you all on behalf of the Brazilian Chamber of Commerce in Great Britain to another of our webinar series, which is focused on the Brazilian economy. In a year where there's, we were just briefly commenting on this, the shifting global order is creating some very interesting environments throughout the world. This is our second in this regular series of updates throughout the year, intended to keep stakeholders in Brazil updated and in touch during this important time. Now, for anyone with commercial and investment interests in Brazil, understanding the country's economic trajectory, I suggest in this year of an election year in Brazil and also with this ongoing shift in the global order. And I mean, last time we had a meeting, we didn't have a war in Iran. There's an energy crisis going on, so there's all sorts of things happening. So I think it's really important that we continue with these events, especially due to their impact on Brazil as stakeholders in Brazil. So the webinar will bring together two very distinguished economists to provide their insights and assessments on Brazil's outlook and looking at the interplay between domestic policy and global capital flows and the country's position within a rapidly changing international order, as we discussed. So I'm delighted to welcome back Luis Fernando Lopes, who's the Chief Economist and Strategist at Patria Investments, based in London. He needs little introduction. He's a friend of the Chamber of Commerce and he's participated in these webinars before. And he's someone whose high profile work focuses on global trends, capital allocation, and international market developments. For the first time, we're joined also by Thiago Angelis, who is an economist with Banco Bradesco in São Paulo, who has extensive experience in macroeconomic research across Brazilian financial markets, economic activity, and politics, as well as in the domestic economic dynamics and financial conditions in many other Latin American economies. So together, our speakers will examine the forces shaping Brazil's growth prospects, fiscal credibility, and the evolving market landscape. And they will, of course, be talking about any political considerations surrounding the forthcoming electoral cycle. The format of our webinar on this occasion, we're going to keep it conversational. I'm going to be posing questions for about 35 to 40 minutes. Our speakers will be answering those questions. We do welcome delegates to pose questions. Unfortunately, there are some technical constraints on how on the interactivity of how we do this. So I'd ask that you send your questions to the webinar chat, where I'll pick them up and pass them on to our experts, and then we'll spend the last 15 to 20 minutes of the webinar set aside to answer your questions. Okay? So without any further ado and conversation, I'm now going to go on to talking about I'm going to ask the first question. I'm going to pose it to Luis Fernando. I'm going to ask you, Luis Fernando, initially, certainly. Brazilian assets performed remarkably well in 2025. And I think, from what I've been reading, the same as this year, despite the steady deterioration of the global geopolitical scenario, the energy crisis, and the other things ever since. So how do you explain this development?
Okay, thank you very much, Simon. It's always a pleasure to be here. It's also a pleasure to have Thiago with us. So what's the explanation? Well, basically, it's the relative situation of Brazil compared to everybody else, United States, Europe, Middle East, etc., got much better. That's the simple answer. But of course, that might result from Brazil evolving and a fundamental story got much better, whereas the rest of the world was pretty much the same. Or what we think that actually happened. Brazil, the fundamental story hasn't changed that much. There are some things that may change or are likely to change in this general election that we are going to comment in a few minutes. But basically, what happened in the rest of the world got much, much worse. So as you mentioned, basically we have now a geopolitical crisis in the Middle East, an energy crisis. Last time that we met in February, the global geopolitics was noisy, but not that ugly. But then if you factor in the impact of this geopolitical crisis and the energy shock, for Brazil, it's net positive. It's a gain in terms of trade. The perception that Brazil is far away from this geopolitical conflagration also helps. So again, Brazil did nothing spectacular. It's just that the rest of the world got much uglier. So on a risk-return point of view, Brazilian assets, the currency, fixed income instruments, interest rates in Brazil are still very high. Even equities or real estate, they look attractive given that the rest of the world is now a much riskier place with more inflation pressures and things are changing fast on the wrong direction outside Brazil. That would be my preliminary answer.
Cool. So Thiago, I mean, the rest of the world is becoming riskier. So would you like to compliment what discuss what Luis Fernando mentioned?
Yeah, I agree, Simon, and good morning, everyone. Thanks for having us here. I think in this sense, this poor geopolitical environment may actually help now. I've been visiting foreign clients regularly now for the last 2 years, and most recently, I've been to the US in a series of meetings, and I was able to grasp that perception quite clearly, I would say, over the last couple of months. I was in the US, for example, for a round of talks with institutional investors in September, in November, in January, now in April. And it's quite clear to me, Simon, that there is a combination of a rotation trade in the one hand and a debasement trade on the other that made markets like the Brazilian one quite interesting from this foreigner perspective. So from an asset price point of view, I think Brazil is perceived as a large and liquid market, such that if one is trying to stay a little bit less invested in the US and trying to look for other alternatives, some emerging markets will be interesting, and Brazil, as I said, is a large and liquid market with some very interesting appealing factors, such as at this point a high interest rate, as Luis Fernando just pointed out, in terms of a large carry trade. But from a market point of view, you're actually considering that there will be a rate cut in Brazil, and that remains to be the case in spite of the war. I mean, there's a lot that we can talk about this, and I'm pretty sure we'll dive into those details. But from a foreigner point of view, I would say that Brazil or any large emerging market that's kind of away all of this, I think it's actually a pretty interesting aspect that could be somewhat achievable at this point. And I think that's what is under the investors' radar at this point.
Okay, so but I mean, I have my own views on certain sectors of the Brazilian economy, which are going well. But looking ahead over the next 12 to 18 months, which sectors of the economy do you believe are most likely to attract significant international capital? Thiago, would you like to start off with that one?
Okay, so I would, start here from a very, very macro point of view. I would say that given the resilience of the Brazilian economy, I would say that consumption-linked sectors are still doing pretty well, not necessarily in terms of valuation and so on, but when I take a look, as I said, as a macroeconomist, I'd say that the numbers are pretty resilient. They are somewhat still striking when you consider, for example, what's going on with an employment rate in Brazil, how resilient the job market is. Real wages have been rising in Brazil for a couple of years now. So I would say that retail, services, consumer credit, they are all somewhat benefiting from all of this. But this is like a very conjunctural point of view. From a more structural point of view, I would point that Brazil retains all the strengths that we've used to have for the last couple of years. So agribusiness is still something that it's always amazing in terms of the performance, in terms of productivity. I mean, if there is one sector in Brazil that keeps posting important productivity gains, that is the agribusiness sector. And we have all the other sectors that kind of remain as one strength from a general point of view, especially from a longer term investment point of view, which I would say it's basically clean energy in Brazil. I mean, we can go through the details. I won't bother with you. I'm pretty sure Luis can add something to that. But Brazil has this incredibly clean and renewable energy matrix. So that's certainly a topic that will be with us for the next couple of years as AI and all these developments in the tech sector continue to evolve. And this is kind of a weakness thing, but that's also an opportunity. Infrastructure in Brazil is also something to be done, right? I mean, it's been the case for a long time, and I think we have just begun to get those things going. So once again, we can dive into the details, but I would like to listen to Luis Fernando on this.
More than happy to add. I just landed in London. I spent this week in New York. Patria did its annual general meeting, and we had over 200 investors. So the picture, how the rest of all those foreign investors, how they see Brazil is exactly what Thiago mentioned. So he gave you the picture until April. We can give you the picture until yesterday. It's exactly the same. And then Brazil, to add to what Thiago said, Brazil has this, the acronym is HALO, HALO. There is this heavy assets, low obsolescence combination of things in which investors are interested in the story. But if you have an investment story that can be hampered or can be completely obliterated by AI and the technological disruption, that's the problem, for example, with an awful lot of investment thesis on softwares, for example, then you are in trouble. Brazil is not that story. So going back to what we have been just discussing here, for example, if you go to agribusiness, we have the competitive edge, long-term global comparative advantage, very, very strong productivity, and everything that is new technology, new disruption that is producing adds to the agriculture thing. The same thing with mining. Let's remember that's the story that we have. Brazil is very good on the traditional mining thing, like iron ore, but there is the critical mineral story, which has to do with the AI revolution and the tech disruption. But in addition to that, there is almost nearly everything to be done. So you have to enhance, to build up the mining facilities, etc. So this is a story that is flying a lot. Of course, energy, renewables, fully agreed, but let's not be naive. Oil and gas, we are in a world in which there is an energy shock. We need every drop of oil and gas. It was a little bit complicated conversation until a couple of years ago because of the ESG demands and the energy transition thing. Now, I think it became a consensus. If you have renewable energy, so much better. But in addition to that, if you have oil and gas, and Brazil has oil and gas, that's a very interesting asset. There is no halo issue. It's heavy asset. There is low obsolescence there. So actually, that explains why asset prices are moving in Brazil. Basically, you have almost everything that the market is demanding or finding interesting right now. And coming from a situation that Simon made a point, 2025 was a price realignment thing in which almost everything in Brazil, the prices of assets went up. But you are still looking at that thing. There are still, relatively speaking, assets that are somewhat cheap compared to how they trade outside Brazil. So there is more to come in that sense. And remember, we still have very high interest rates. And I fully agree with Thiago. The discussion in Brazil is by how much the central bank is going to cut interest rates. It's still an interest rate cut story. Probably no longer 50 basis points or half percentage point by every meeting of the Monetary Policy Committee, but maybe 25. But as we speak today, for example, the market is getting an indigestion because they're starting to price in that the Federal Reserve will have to raise interest rates in the US. That was not in the radar screen. So, but again, Brazil telling a completely different story. If the interest rates go further down in Brazil, you have to reprice upwards real estate assets, infrastructure assets, etc. So we are still going to see these developments over the next few months.
Okay, that's I'm going to change the format slightly because a couple of questions have come through which are very relevant to actually this part of the conversation, and also I was just thinking about what are the greatest risks that investors may currently be underestimating, and also we've got Marcelo Carvalho has asked the question, what are the main risks that the markets are currently mispricing? So I think that's a logical, way to go in this conversation. Where do you see the main risk that so the market hasn't yet recognized currently mispricing?
So let me start, and then more than happy to hand over to Thiago. Major mispricing. I think going back to our previous conversation in February, the market is doing a very poor job in pricing in how bad global geopolitics is. So now we have an energy crisis. Oil prices are no longer trading at $60 a barrel. They are over 100. What's the mispricing? The market's still pricing in. You have the forward oil prices is still pricing oil price going down until the end of this year and further down into 2027. So that's the so-called the backwardation, the technical term for that. Well, if there is another round of deterioration in the Middle East, for example, market's not pricing in that may be another major US attack combined with Israel against Iran, and then oil prices may go up further. That's not what you see in the future markets. That would drive energy costs even higher, and then the market has to price in a stagflationary shock around the globe, similar to what we got, for example, in the early 70s or in the late 70s as well. That's a major risk. Brazil would be affected, yes, much, much less than the rest of the world, but we cannot be naive. And then Marcelo Carvalho knows this long experience in how investors behave when there is a global shock. Basically, what's going to happen, investors, they fly to safety, and then they are going to reduce exposure to emerging markets, to everywhere else, because, well, much higher oil prices, much higher inflation, much higher interest rates in the US, significant slowdown. So that it's not the most likely scenario, but then the question is what the risks that are being mispriced or underestimated. This is a risk of a significant deterioration of the global geopolitics, even compared to what we have today. In the case of Brazil, I think the major risk that we may see domestically is whether if you go to this worst case scenario in the rest of the world, the market might price in that the central bank is going to stop cutting interest rates, which I don't think is a likely outcome. But in this case, we may have a more significant credit crunch in Brazil. We have some signs that the market in Brazil is under some stress. There has been some large corporations going belly up. We have some, most of them are public. We're talking about Raizen. We're talking about companies that already have credit problems. So in this case, the credit crunch may get really a problem in Brazil. And then in this case, actually, I think that the central bank will have to cut interest rates faster, not slowly. But that's something that may cause some trouble, and then the market is not seeing that. But so the two shocks, the credit thing in Brazil plus the geopolitical deterioration outside, there are connected shocks that in a worst case scenario could create problems, and that's definitely not what the market is seeing today. Thiago?
Okay.
I totally agree with Luis here. I think that the largest risk that we have is this perception around the geopolitical environment, in the sense that eventually it could make oil prices higher for a lot longer than what markets are pricing in, or even higher than the levels we are considering right now. And the risk would be of a shift in global monetary policy stance, right? Because I'm pretty sure that from a market point of view, first thing that economists and traders will consider is that, okay, inflation will go up by X basis points. That would make central banks react in such a way that they will have to raise interest rates by Y basis points. And yeah, that would be a possible environment in which the central bank here in Brazil eventually has to pause, right? And I like to use the word pause because to me it's quite clear, agreeing with what Luis just said, that without the support of a weaker BRL, I don't see why there will be this, on a relatively comparative basis, this perception that, well, monetary policy here is a lot it's neutral, or it's close to where it should be. I mean, the perception that around the central bank is quite the opposite, right? They still have their diagnosis that monetary policy is too tight, and they have enough of room to keep cutting in spite of what we had as an oil shock. So I think that begs the question, then what could make maybe the BRL not this strong, or maybe just create this strong dollar environment? And I've been testing that with investors as well, and nobody has a clear answer. I mean, there is this perception around back to my initial point, this debasement and this rotation trade, that it's kind of something that it's there, and it will not change anytime soon, especially this debasement thing. The fiscal became an issue elsewhere in the world, not just in Brazil. So that's kind of to our benefit here. But in that sense, it's hard to see what would make the US dollar stronger at this point. So we are not back to those moments in which we were by the end of 2024, in which the DXY was trading at 110 or so. So in that sense, I think on a relative basis, I would still see Brazil's kind of a beneficial to all of this, because we would still see some room for the central bank to cut. They could pause, and I'm pretty sure that if we're just moving down the road and nothing changes in terms of the oil outlook, there could be a pause from the central bank perspective, but that it's going to be quite clearly a pause. I don't see any room for the central bank to make this an extended pause, or even to consider increasing rates in spite of what happens elsewhere in the world. And I think that's the risk we may actually have from a global point of view. I mean, I'm pretty sure, as I said, that markets will price in that rates will be higher elsewhere in the world. But I'm also pretty sure that, as just like Luis said, that there will be a credit crunch here in Brazil, I'm pretty sure that traders and economists will underestimate the impact of this oil shock in terms of global economic activity looking down the road. So Europe and Asia, I think, are the most clear cases in which you would be kind of adding to this interest rate or this financial conditions shock. You would add, obviously, what's going on in terms of this cost shock. So I'm pretty sure that at one point or another, we will consider those central banks will have to reduce rates. So I think the risk here is actually having a lot of interest rate volatility, much more than we're just changing the mood completely.
Okay, that's interesting, because it brings me on essentially to, if we take the strength of the real and take the volatility of interest rates, and you mentioned Brazil's trading partners. So China remains Brazil's largest trading partner. Also relations with the United States, Europe, and with the White. There was recently with an agreement with the European Union And of course, there's the consideration of the BRICS bloc as well to take into account. These relationships continue to evolve. How successfully can Brazil balance these competing relationships without creating more strategic or economic tensions that already exist in the world? How do you see that evolving?
Okay, if I can start here, and then I'll hand it over to
Thiago.
Luis. I think one key aspect here to keep in mind, Simon, is that well, Brazil's foreign policy has been always multilateral and pragmatic, I would say, for generations, and the trade data show it's working, right? I mean, obviously, China overtook the U.S. as Brazil's largest trading partner for maybe 15 or 20 years now. By 2025, bilateral trade with China reached almost 200 billion reais. It's a record, and that was way above what we have as a chain of commerce with the U.S., which is a little less than 100 billion reais. So, I mean, China's share of Brazil's agricultural exports rose by a lot. I mean, we're roughly a third of exports in 2024, 2025. So that's a pivot. But I think we managed to do that without abandoning Western partners. So what I want to stress here is that this balancing is not improvisation, right? I mean, it's part of this larger story in which Brazil tries to make this more pragmatic approach, and I think that what happened last year it's a good example of this. But we are at the same time adapting to this new environment, right? I mean, in this new scenario, I think that China, it's a much more interesting partner, not in the sense that we are sticking to them, but we have to consider them as one important partner, and I think it will probably be the case, right? I mean, but I think that in spite of all the noise that politics now bring, not only because we have a leftist government here in Brazil, but also because what happened last year with Trump was actually kind of this political play, I think we managed to survive all of this, right? We hosted the BRICS summit in 2025, and well, a year later, we are now here with this conclusion of the European Union Mercosur trade agreement, and probably headed for other agreements as well. I mean, the chances are we could have something going on with Canada pretty soon. So we do not pick sides on principle. We just try to diversify relationships and intermediate flows.
That sounds good news. Luis Fernando, what's your opinion?
My point here that unlike the US, I think Brazil's trade and investment strategy is a winner. We, as Thiago said, we don't pick our partners. Actually, there is more incentive to diversify. So I see actually the Mercosur trade agreement making room for similar deal with Canada, UK, if they want to do something in that same route. We are receiving signs that Middle Eastern countries and more Asian nations, they want to have these things with Brazil, with Mercosur, without Mercosur, etc. And that basically became possible, first because Brazil is pursuing the same trade and foreign policy. Actually, probably one of the few things that there was a continuation from the military ruling into democracy in Brazil. Is not like that. Brazil started to diversify going back to the late 1960s, early 1970s. So that was a very successful strategy. If you go to the United States, what happened over the past with Trump 1.0, now Trump's second term, it's completely opposite. So the raise import tariffs, that was a sheer disaster. It's not helping U.S. export. It's not reducing import. The trade deficit is still pretty much the same size. They didn't get, they announced the trade agreement with China in Trump's first term. And then you could see China bought nothing, zero, zippo of additional goods from the US. And now there is this even more challenging situation in which the US raised further import tariffs to China, and China retaliated. So US is pretty much the textbook example of what you should not do, whereas Brazil has been playing pretty much the same thing. And of course, you see the US dollar depreciated significantly, and several investment that were going to the United States and now going to reverse, something that we also noted from our conversation with our investors.
Mm-hmm.
It's not only the new money flowing to the US is much less substantial than it was before, but there are some nations, no surprise here, obvious candidates, obvious suspects like Chinese, they are actually taking money out of the United States, big sums. And a good chunk of this money is actually going to come to Brazil because it's a more reliable trade partners. It's this combination that they like. Brazil has natural resources. You mentioned there's a major trade partner. Brazil exports a lot of natural resources. But in addition to that, Brazil has this deep domestic market in which Chinese companies, some of them became already very famous, BYD or Huawei in terms of the IT technology, they can dive into this deep domestic market. Rules of the game are the same, no retaliation by the government. Remember the Huawei thing, they landed in Brazil not under Lula's administration, as mentioned here, it's a leftist administration, but actually they won the 5G auction that was held under Bolsonaro's government. So that shows a very impressive stability in terms of the rules of the game. Bolsonaro allowing the Chinese to win the 5G auction with Huawei, and now, of course, we have more BYD developing in terms of the automaker, etc. So things looks very interesting for Brazil as long as they are continuing to play. And I know we are going to discuss election, but we are pretty confident that whoever is elected, we still don't know who is going to be the next president. Whoever is elected in October, the trade policy and the foreign policy is going to stay. There is no reason to change.
If I may add one thing here, Simon, just very quickly, I think that it's not just about having a very diversified profile of exports in terms of partners, but also in terms of its content, right? I mean, it's worth just highlighting here that Brazil, it's indeed a commodity exporting economy. That's true. I mean, but we have a profile of exports which is quite well diverse within commodities. So we have farming, we have mining, we have energy, and we also have a little bit of non-commodities as well. But I mean, it's not as if, okay, we have a problem with one specific product and then we're doomed. No, we have a lot. As Luis Fernando pointed out, Brazil is becoming a very important oil player. I mean, we can do a lot of talk here around the clean energy thing, but Brazil, it's about to become the 4th or 5th largest oil producer in the world. So I think it's just worth just mentioning. We are an exporting and a commodity exporting economy, but we have a pretty well diversified profile of exports.
Well, that's very relevant. We have a follow-on question from our friend Armando Carvania, who asks, and I think that this is the logical place to ask this question: how can industrial policies in Brazil be adjusted in light of the evident deglobalization? And I think there's an opportunity there to perhaps comment on exactly what you were saying. Brazil's diversified economy, what can be exploited?
May I start?
Yes, please.
Sure.
So we have to tread very carefully here with the industrial policy thing. Industrial policy in Brazil, that was something that was a nasty continuation from the military regime until deep into Brazil's democratic system nowadays, that basically it's a combination of picking up the winners and giving them, or as a gift, high import tariffs, tax breaks, subsidized credit. And the result in Brazil of this industrial policy thing has been, like the trade policy in the United States, has been a disaster. We should avoid this at any cost. I don't think Brazil has any fiscal room to go that route again. But having said that, there is another thing that we at Patria prefer to think. So let's talk about aggregating value to the commodity export that Brazil has comparative advantage, agribusiness, mining, oil and gas, etc. So that's something that can be done. And then what we have to do is look backwards and forward linkages in terms of this production. So, for example, there is room to develop, if you go to agribusiness, or if you go even to think that which is the new edge, mining critical minerals. Something that can be done in addition to the mining activity itself is that let's look about everything around this mining activity that will make possible Brazil to be a major producer of critical minerals in the world. So there is room for create additional value on engineering companies, on transportation to the site and taking the things out of the site. Can be railway, can be, depending on the location, can be navigation through waterways inside Brazil. There is, I think, technology that can use, develop on site to, can use AI, etc., to make this activity more competitive. So all the things you can do, there is no need for credit subsidies by BNDES or tax breaks, etc. So if you go in that direction, so the market gives you the primary signal, there is demand, let's go there, and there is the way to create value in Brazil with other activities related to the primary extraction. That proposition, I think, is a winner. The thing that cannot happen, and we have a very good example because the legislation has been voted in the Congress. There is now a specific legislation in Brazil on critical minerals. The first move of this government was to create, I'm not joking, a Terrabras. So they want to create a state-owned company to export the whole thing. That was exactly the wrong model, the stupid move. And then with the discussion within the government, with the Congress, the private sector, they dropped the Terrabras thing, and now we have a much more interesting legislation. Okay, let's go into that direction. So that would be my take about this industrial policy thing, the thing to do and the things definitely not to do.
That sounds, that sounds very, very positive. We're having these discussions about food security, about energy security, food security with the agribusiness, critical minerals. My question, which really is a follow-up.
May I add just one thing here, Simon? Sorry,
yeah,
just to add in terms of, and I kind of just made one extra point here. I think just like Luis Fernando, industrial policy just kind of gets me goosebumps. So we try to stay away from those at this point. Obviously, if done the right way, but doing it the right way is just almost impossible. But given the recent experience, I would say that it's usually a bad signal. I would say that just as a reminder, the most successful policy intervention we had in Brazil in terms of trying to stimulate growth or increase productivity was one that nobody remembers about, which was the creation of Embrapa back in the 70s under military ruling, in which there was, as Luis said, no tax break, no credit, no nothing. It was pure research and just sending, students across the globe to study and develop all the wonderful things they have developed, and just making Brazil this huge powerhouse that it is right now. So that's kind of the policy intervention done the right way. If we can say anything about just trying to stimulate manufacturing here in Brazil, I would just go with doing the basic, which is just, trying to resolve everything that we have in terms of infrastructure and all the lack of infrastructure that we still have. And there is one thing that is going on kind of in the background here, and it's not really spoken a lot, which is the consumption tax reform that Brazil has been going through. That's transformative, I would say. Brazil is just substituting these incredibly messy tax system in terms of our consumption taxes to a kind of ideal VAT system. We kind of have one VAT here, but it doesn't work. So we are moving towards that right now. I think industries are currently penalized by this tax cascading, and manufacturing is one of them. So that should re-rate manufacturing in Brazil as we go through this transformation. It's a long process. It's going to take some 5 to 6 years until we are over this phasing out of the old regime. But I think it's worth just pointing out that kind of doing the basic thing here, I think it works better than just going on with a full-fledged industrial policy.
Well,
sorry to interrupt you, Simon.
No, I was faffing around anyway, because I would. Do you think that this combination of the industrial policy, the fragmented geopolitical environment, I mean, is Brazil in a position where it will emerge as a strategic global power, or are there some underperforming risks again? Where do you see that? I mean, it's a $1 million question, but a bit unfair perhaps, but I'd like to hear your opinion.
Would you like to start, Luis?
Whoever, I mean, Luis Fernando, if you'd like to.
I can start.
Okay, go ahead, Thiago. And then
okay. Well, I would say that yes, we do have these risk here in Brazil, which is the fiscal, which is everything that we have to resolve looking down the road. I mean, if we don't tackle that, that could be something for us to kind of somewhat put everything down in terms of where we could just end up here in terms of missing all those opportunities. So is Brazil positioned to be this strategic global power? Yes, on natural endowments and for all the reasons we have mentioned here, I would say that it's a sound yes to your question. The honest answer, though, is there is this binding constraint here with the fiscal, which is something that will have to be resolved. I mean, I am the one here advocating that the world has moved backwards in terms of the fiscal, and this kind of helps us. But, well, it doesn't change the fact that we have to resolve our own issues here. So gross public debt is heading to something like 95% of the GDP on current projections, depending on how you measure that. That's considering IMF's metrics, but you know, it's high enough, right? Even in our own calculations here, we'll get to something like 82 by the end of this year. It's high for an emerging market like Brazil, and until the market is convinced, Simon, that there is a credible downward path for our debt to GDP, I think Brazil will continue to trade at a risk premium that does not reflect those fundamentals. I think that's the risk, right? I mean, the opportunity for investors is precisely in that gap, because that could be a catalyst if we're managed to deal with all of this.
Yeah, Luis Fernando.
Yeah, going the same direction, a little bit different angle here. So conclusion is going to be the same. So as we are right now, it's very clear. If you look not the macro, but if you go industry or the micro things, so if you go to agribusiness, for example, in Brazil, labor productivity gains 3-4% per year. It's a machine. It's the most efficient in the world, etc. And then if you take the economy as a whole, not the agribusiness, but the whole economy, the productivity is barely growing. So we have actually lots of parts of the economy in which the productivity is going into reverse. It's going into negative territory, and then you balance with agribusiness, a little bit of mining as well, and then you get 0.2, 0.3% growth. So the story there, that's Brazil. So the opportunity is there. We have natural resources. We have lower geopolitical risk. The new alignment of planets in the rest of the world strongly favors Brazil. You can see here on the trade balance numbers, on the foreign direct investment numbers, but the economy as a whole is underperforming. So if we don't change the reason for underperformance, and it's going to be fiscal, I'm going to go back to this in a second, it's going to be more of the same. Part of the economy will boom. It's going to be a spectacular success, as is the case right now. Whereas the rest of the economy performs much less spectacular than these selected sectors. So we have to address the fiscal. I think this administration made a huge bet very early on President Lula's third term, in which they bet on fiscal expansion, strong, robust beginning of the government that would create good, feel-good sentiment, lower political polarization in the country, and that would create conditions for growth, and then down the road, lower inflation, low interest rates, etc., etc. That failed. We didn't have more growth. When President Lula took over, the 12-month trailing real GDP growth was close to 4%. Now we're going to have less than 2% growth probably this year. Interest rates were lower then, now they are higher, going down, but the move was upwards in between. Inflation was lower. Inflation when President Lula took over was going towards the 3% target. Now we are struggling to keep it. It's above 4. We are trying to bring it back to below 4%. The major problem was fiscal. Fiscal got much worse. President Lula inherited a small primary surplus. For those who are not familiar with the lingo, the economic lingo, the primary surplus is the fiscal balance before interest rate payments on public debt. So we're running a small surplus. Now we went into a substantial deficit. Primary, now we are struggling to eliminate the primary deficit, getting close to zero. But then now we have a much bigger interest rate bill, over 8% of GDP. So the fiscal was the problem. So that was a wrong move, a wrong bet. If President Lula got a fourth mandate and moved forward into some kind of fiscal consolidation, improving fiscal accounts, there is room for hope, and then that creates room for lower interest rates and additional investment and additional growth. And then the Brazilian economy catches up with the part of the economy which is already very dynamic. Any candidate, if not President Lula, anybody that is elected that comes with a different proposition, oh, the fiscal is not that much, oh, the market's not falling apart, so I don't need to address the fiscal. This is the wrong diagnosis. But any significant move into further fiscal consolidation transforms the rest of the Brazilian economy or gets it closer to that part of the Brazilian economy which are already very dynamic. So we can be more optimistic depending on the pace of this fiscal adjustment.
Okay, that brings me on to the the elephant in the room, which is the elections, which I think we need to address. We're running out of time a little bit. Still got a couple of questions. So I'm going to go to elections now and just talk about the 2026 election cycle. There's been some news during the past few days as well. So, but
quite a lot, I would say.
Exactly. What are the key indicators that international investors should watch closely? We've discussed fiscal policy. We've touched on central bank independence as well and the role of the central bank. Give us some view of where you think. What's it looking like in terms of the outcome of the general election in later this year? Are we looking at more the same or something else entirely? Where do you think we're going?
Well, from my point of view, there are two elections actually. For those who are not familiar with Brazil election cycle, it's a big business. We are going to elect the president. The whole lower house goes for renovation, 2/3 of the Senate, all the state governments, and all the state legislatures as well. So it's really big business. Everybody's paying attention to the presidential elections. I would first start with the non-presidential election. Investors should pay attention to what's happening in the Congress. We are now probably going into the fourth election cycle in which the political spectrum in terms of who is elected for Congress is shifting from left to center and to the right. There are a number of fundamental reasons for that. The population is aging, is more middle class, so the typical demands of the voter change when you are poor, moving to lower middle class. And there is the issue about Brazilians becoming more conservative because of their increasing share of the evangelicals in the population. So the lower house in Brazil is already much to the right compared to where the federal government with the administration is. The Senate was more in the center of the political spectrum, but we think that voters should pay attention, investors should pay attention. I think we're going to shift significantly to the right. in terms of who are going to be the senators. Remember, we're going to elect 2/3 of the Senate this year. I think the state governments and the state legislatures are going to move further to the right, which creates this situation in which, now moving back to the presidential election, if President Lula succeeds to get in a fourth term, he will have even less room of maneuver compared to what he had in the his third mandate, and he faced some significant defeats. So in between our February webcast and now, we also had this unusual situation in which the president named or appointed a Supreme Court justice, and then the Senate shot him down, which didn't happen since President Floriano Peixoto in the late 19th century. So this was something historic. So we should expect more problems for President Lula because of the Congress definitely shifting more conservative, market-friendly, against government intervention. On the other hand, if the candidate is more to the center-right, more market-friendly, etc., this creates room for another round of reforms that probably are going to strengthen the fiscal framework. What we had under President Lula was almost an imposition from the market. The market demanded some better fiscal rules compared to what President Lula was delivering in his third term. So probably there will be more substantial progress on the fiscal side and probably another round of reform. Just to pick up one that Thiago mentioned, we are in the beginning of the process of a tax reform in Brazil. We addressed a sales tax before a consumer taxation, shifting from a blur or a convoluted tax system in terms of consumption taxation into a VAT, which is much better. But remember, income taxes, on corporate taxes and individual taxes should be changed as well. And there are the taxation on property, so taxation on real estate, etc. So there is a lot of things that can be changed to improve productivity. And it's just moving further into market-friendly reform, which probably are going to be easier to address, given what the Congress is looking like. Actually, we had a significant progress in terms of reforms over the past cycles because the Congress moved toward that direction. So again, over the past three election cycles, clearly there was more market-friendly reforms, tax reform that were mentioned, labor reform, central bank independence, etc. So the Congress, we are cautiously constructive. But then the big question mark is who is going to be elected president, and that, at least on our side, we still don't know. Thiago?
Yeah, I agree with the whole thing, Luis. I think if I were to sum up, I would say that the choices around the fiscal will be key, right? I mean, not necessarily the number themselves that will be presented, but how credible that trajectory, for instance, will be. Right now, the government is just saying that trajectory will somewhat curb by 2028, 2029, which is definitely not the case when you consider other parameters than the ones that they have been using. So I would say that it's around this credibility about the choices and whether or not markets will embrace it. I think one thing just worth mentioning here is that we will not have the very same thing we had back in 2023 when Lula made I would say, rather uncommon choice of completely reversing the political cycle by stepping up expenses as soon as he took office, right? I don't think this is going to happen this time around. So in that sense, I'm not a pessimist, because I don't think there will be anything like this. That was kind of a very weird thing from a political science point of view. And the political scientists, they have all these reasons for why that happened. It's not useful to bring that now here, but I think that the point is, right now it's not about just not stepping up expenses. We do have to make a choice of making some decisions in order to curb that trajectory. So I think that's what's the most important. And I agree that Congress will likely work as a check here. I'm not saying Congress in Brazil it's fiscally responsible. It's not the case, but they are sensible enough for for asset prices and for this convoluted environment if it is the case. So let's just remember what happened back in 2016 when Dilma was kind of trying to fix the economy, kind of still a little late than what she should have done. And well, Congress just made a choice and eventually impeached her. So I strongly agree with Luis here that Congress will likely work as a check. It's moving more to the right. And it's the very same Congress that approved, for example, central bank independence, which is something that we take for granted now, but it's quite important for us to, when we're talking to foreigners and say, hey, yeah, you can rest assured, you can have doubts whether or not that maybe the central bank is cutting 25 or 50 or whatever, but it's quite clear that the central bank is independent. I mean, take a look at where real rates are in Brazil. Even economists themselves are just debating whether or not it should be that high. Luis just mentioned about a credit crunch, which is a possibility that we also consider if rates do not go down. So that's not an issue we take for granted, but that's a really important thing that we should keep in mind. And I think that Congress will keep working in that direction. So in that sense, I would say that choices around the fiscal will be the most important indicator to watch here, Simon. But we don't know who will be sitting there and making those decisions. The thing that we can have as kind of a silver lining is that checks in Brazil, they have been working, and that's something really interesting that I heard from a American investor, maybe influenced by what's going on in the US, I'm not sure, but that's something that I hadn't heard ever, right? I mean, one foreigner telling me that Brazilians institutions, they are working and we have checks here. So I think that's one very, very important thing for us to keep in mind looking down through these election lenses. I'm not sure who's going to win. As you said, the political news flow was kind of crazy this week in Brazil, but in this sense, I'm kind of an optimist, right? I do believe that we are, from a political point of view, in a less malfunctioning democracy than other democracies out there in the world at this point.
I might add that the Economist magazine for some time has been a fan, or I wouldn't, fan perhaps is too strong a word, but it's certainly been very positive about the Brazilian system of checks and balances and its governance. So that's good news. Sadly, we are running out of time, and I know that we've got a couple of questions from the floor or from our delegates. If I might just ask you to respond very quickly on those. One of them from our dear friend Ieda Gomez is that the manufacturing industry in Brazil has been suffering from high taxes, high energy costs, and competition from cheaper imported products. Do you see any improvement going forwards? Luis Fernando, perhaps you can answer that one.
Yes, we can, but we could cautiously optimistic in terms of where the manufacturing industry is the manufacturing activity is going to be in Brazil. First, because it's very difficult to see, for example, if you have any progress on the tax system, and you are making progress on the tax system, probably the biggest net winner, if you take agribusiness, services, and manufacturing activity, this is going to be the big winner in terms of having less taxation. I think also that the geopolitical environment and the diversification story in terms of having additional trade partners probably create more room for manufacturing exports in Brazil. So cautiously optimistic that from a very low basis, manufacturing will see better days in the near future.
Okay, I'm going to carry on talking. I know that we're getting very close to it, but hopefully we can overrun a little bit. Another question as well from Diego Bonomo. He asks, and this refers to your very interesting reference to HALO, which is the first time I've heard that acronym used in that way, and I was very interested by it, Luis Fernando. But what should Brazil be doing to extract the maximum possible benefit out of this net positive gain that I think it was in that HALO conversation that you were talking about. Perhaps just to mix it up a bit, Thiago, would you like to comment on this one?
Well, that's something that I would say that what we have as a strength will be exactly what we should be focusing on from now on. I mean, considering what Luis Fernando said, I think come on. I mean, there are things that we have to keep in mind here, right? I mean, we have these incredibly interesting perspective in terms of all the opportunities that we have in terms of mining and in terms of this clean energy process that will be there for quite some time. So I think that the more we are able to sustain this environment in which we are perceived as this interesting place in which you have all the resources and you still have this geopolitical advantage of not being carried away either by a conflict or because you're choosing sides. I think as long as you have that and you have the macro thing going on in terms of being stable enough, I would say that we're good to go. So I'm not going into the details, and I'm pretty sure Luis can go into that, but I would say that as long as we have this setting, and I think we are pretty good and well positioned for that. I think asset prices speak for themselves in that sense. I think that we have the basics, right? Then in terms of the nitty gritty, then I'll just hand it over to Luis.
Oh, very simple complement to what Thiago just said. Best way to maximize the halo benefit that the Brazilian economy already has is basically do the fiscal framework, do the fiscal job or your homework, reduce the fiscal imbalance. Interest rates will go down significantly. Allow the central bank to cut interest rate from nearly 15% to 10% or less. You're going to see capital expenditure boom, and then it's going to be pretty obvious. But you have to start with the macro, because the industrial thing, the micro things are already happening. You just need the macro to adjust, and then allow this private push, which is already there, to become even stronger.
If the macro doesn't get in the way, probably the rest will follow, right?
Yeah, cool, excellent. Look, guys, I'm conscious of the fact that I've got about another 15 questions, and there are also other questions that we can't carry on. Unfortunately, our time is up, but I would like to invite you both back towards mid-September, mid to end of September, so that we can continue with the discussion, updated, no doubt, with everything that's going on in the world, and conveniently close to the elections. I think we didn't really deal very much with the elections, but we just didn't have enough time. But certainly your insights were very valued, and I think and I know you're as you mentioned earlier, you know, the political and it's always complicated. But I think we have to end the discussion, so I'm just going to wrap it all up by firstly, on behalf of the Brazilian Chamber of Commerce in Great Britain and our chair Vera Innes, who has been she's been accompanying this presentation throughout, and whom we're all very delighted to continue to develop bilateral relations between the UK and Brazil. I'd like to extend our sincere thanks to everybody who's been who's joined us today. Our particular gratitude to you guys, Luis Fernando Lopes of Patria and Thiago Angelis of Bradesco, sharing your insights, creating a really dynamic conversation, looking forwards as well. Your analysis, I felt really helped us, and I'm sure everybody else agrees, in terms of understanding Brazil's economic outlook for the future, and also those broader global forces that are affecting all of us today, but seeing how they particularly affect Brazil. I'm also grateful to Lena Beraldo at the Chamber, who puts these things together and then ropes us all into volunteering to carry these things out. So that's wonderfully well done. Lena, often overlooked with the work that she does, and we're also particularly grateful to you, our audience, for your engagement and the questions that you've been sending in, and I'm sorry if we weren't able to deal with them all, but it's essential in fostering this informed dialogue that the Chamber is seeking to promote. Anyway, so thank you all once again for being with us today. Look forward to seeing you, especially our speakers, Luis Fernando and Thiago, and everybody else at our next chamber event. As I mentioned, we'll be coming up with more details mid to end of September. Thank you all. Take care. Have a great day. Yeah,
that was great.
You.
Thank you.
Thank
Thank
you
you,
all.
Simon. Thank you. Thank you, Luis. Talk to you soon. Bye.
Bye.